All right, so I did make the group chat finally on Telegram because Discord, I want to eventually transition to Discord just for privacy reasons and stuff like that. But for now, we just want to stick to Telegram. So you guys should be in that chat. Within that chat, I will post the videos just because as the class grows, of course, it's a business. We want it to get bigger. I don't want to be sending so many emails to so many different people. And I'd rather everybody just be in the chat because all of the information will be in there. I'll also be posting trade ideas in there. So after the classes, I'll be posting the trade ideas that I mentioned in the class, and then I will also be posting additional trade ideas throughout the week as well. So I wanted to make sure that I had that at least set up by today's class. And if you were in Sunday's class and you were able to get into those trades and set the pending orders, both of them hit TP. So if you were on Sunday's class and you got into the trades and you made money, just drop some sevens in the chat. If you missed those trade ideas, but you saw them in the chat, just drop some threes in the chat. So I'm gonna go ahead and drop some sevens for myself because I definitely made money. And I was super excited about that. Also, if you are going to be focused on traditional, yay, that's good. Also, if you are going to be focused on traditional Forex trading and you don't have MetaTrader 4 because you've deleted it off your phone and it's no longer in the Apple, what's it called? The App Store from Apple, then just reach out to me so that I can help you find an alternative platform because I have been playing with a few of them just to make sure that everybody can still have access to the classes. So shout out to y'all who made money. Today's session is Tuesday. Hold on. Terrell, I'm just gonna put you on mute, but welcome to the class. Today is Tuesday.
Thank you.
So we are going to be focused on high frequency trading. And high frequency trading is, of course, again, binary options, and a platform that we're going to be using is Pocket Options. So I'm gonna go ahead and turn my camera off and we're going to get into this lesson. Stop video. All right, perfect. So again, this is a style of trading that is within the foreign exchange market. Forex, of course, is short for foreign exchange, which is the largest financial market in the entire world. It's bigger than the stock market, it's bigger than the futures market, it's bigger than any market that you can choose to invest in. It's liquid, which means that there's always a lot of money moving in and out of this market. And once you make your profits, you can withdraw within the same day. You don't have to hold your trades for months or even years. What we're going to be doing today is we're going to be in our trades for anywhere from 1 minute to 3 minutes, which is pretty quickly. I was introduced to this style of trading about 2 years ago. This was the very first way that I learned to trade before I even learned to trade Forex. And I have built my confidence. I've literally helped thousands of other people build their confidence as well. So as long as you are understanding the fundamentals of chart analysis and you have 1 to 3 indicators that you really understand, you can definitely find yourself to be extremely profitable in this market. Now, Pocket Option is the platform that we are going to be using today, but this is not the only trading platform, right? There's Race Option, there's Vide Forex. So you do have options if you don't feel comfortable using this one, but for the purpose of this class, this is what I'll be using. I do have other Pocket Option videos, like in-depth intro to Pocket Option videos that I do have on my YouTube channel. So if you're not subscribed, you can subscribe to there, and it'll give you a better understanding of the platform. In the last couple of months, Pocket Option has added some updates. So as we go through today's session, I will probably be using them, or you can use them as well. So first and foremost, it is free to use this. You can have a demo account, or you can go ahead and fund up and use your live account if that's something that you want to do. But I always say that when I'm teaching, you should probably use your demo because I'm giving examples. And just because I say something, it could just be an example and it's not necessarily a trade idea. I typically will drop the trade ideas in the chat. So first and foremost, this session is going to be a little bit different than the ones we've done before because it's essentially going to be a live trading session where I will be giving out trade ideas. But as I work through those trade ideas, I'm going to explain why I am taking this trade. If at any point in time you guys do have questions, you can feel free to drop them in the chat or unmute yourself and I will answer your question to the best of my ability. If at any point in time I start to break up, just drop some fours in the chat. If you've been on the session, you know this. If you're new here, I'm just letting you know so that I can just glance at the chat. And then once I stop breaking up, you can just drop some eights and I'll know I'm good to go. So If you guys are ready to go ahead and jump into this session, training / live trading, just drop some sevens in the chat and I'm going to go ahead and move forward. All right, perfect. Thank you. And again, this is being recorded, so you can go back and watch it anytime. So first, when you log on to pocketoption.com, it may look a little bit different than this, and you could format your settings to have your chart look like this if you wanted to. But it's only a few basic things that we need to understand. Now, firstly, we need to choose which currency pair that we're going to be trading. When I'm trading HFX or high frequency binary options, I like to make sure that my payout is at least 70%. Now, what does this mean? This means that whatever you're putting into that trade, if the trade goes in your favor, you're going to end up making a certain percentage of that back. So I'm just gonna do a demo trade right now. I'm not doing any analysis. I'm gonna change the trade amount to $100. Hold on, let me choose something. I'm gonna choose randomly AUDCAD, and I can see that my payout is 92%. Right, so this means that if this trade goes in my favor, my profit will be $92 on my risk of $100. So pay attention to my balance right here. We can see that my balance is $46,349. When I enter this trade, I'll just randomly click sell, right? You can see that my balance went down by $100. So my balance went to $46,249. So your amount is how much you're risking into the trade, and your profit is how much you will make. So if this trade were to go in my favor, I would get my $100 back, and I will also make that $92 profit. Now, on the right side of your screen, you're going to see a bunch of different things that you could have open, but you really just need to have your trade screen open so that you can see all the details of your trade. It'll tell you which currency pair you're currently trading, how much your risk is, whether you got in for a buy or a sell, and it'll also let you know here what your profit or loss would be. So again, if this trade goes in my favor, I would make $192. If this trade does not go in my favor, I'm only losing the $100 that I put into the trade, right? So that's important to understand. Like if I get into the trade and it doesn't clear, I'm not losing $192. I'm only losing what I risk. So that's just something important to understand. So we're going to select our currency pair. And the currency pair you guys know that I love to trade is Euro USD. So I'm going to go ahead and I'm going to select Euro USD OTC. I'm going to click this star to the left of it because I want to add it to my favorites and keep it at the top. And this is the pair that we're going to be using for the session. So if you're on Euro USD, or once you get there, you can just go ahead and drop EU in the chat so that everybody is on the same page for these trade ideas. Now, the next thing after you select your currency pair, you're going to want to do a quick look at the news because you want to know what's going on, right? High frequency trading is so fast, and you really kind of want to know, is there any news that would be disruptive to my trading during this session? So forexfactory.com is a free website you can use, and it's pretty intuitive. It's pretty simple. You want to look for the time. The time is currently 7:19 p.m. And you just want to see, do you have any folders around that time that would affect your trading? So again, I just like to do a basics every time so that you guys understand how to use the news in your trading. So the market is always going up and down, right? That's the market is going up and down. And there will be an area of resistance, which is at the top, and there will be an area of support, which is at the bottom. Now, if you see a yellow folder, this is pretty standard and typical news, and nothing is crazy that's happening. Risk appropriately. If you see an orange folder, that's a little bit of news. So while the market will be doing its regular thing, there may be some breakouts. You may see something like that. There'll be a extreme candle, and then it'll come back into the range. And then there may be another extreme candle before it moves back into the range. Now, if you're trading on a red folder, which I do not recommend, the market is going to be like this. So it'll be hard for you to pinpoint those entry points because the news is so volatile. An example of this would be, let's just say, if Donald Trump was still the president, and then there was a red folder that said Trump is speaking, A lot of people, while the market may have been going okay, as soon as they say Trump is speaking, a lot of people may end up selling and the market may drop dramatically simply because that is high impact news. So you want to make sure that the time you're trading, there's either no folder or there's a yellow folder. But a no folder is the best thing to see because that means that there's no news that's going to affect your trades. Now, I don't see anything for Euro or USD. We can see AUD had a little bit of news, but we're not trading that. We're going to Euro USD. So far, we're in the clear. We know we got Euro USD. We know the currency pair we selected. We checked the news. The next thing we're going to do is select our time frame for our candles. So these things are called candles. And these, again, I call them price action snapshots because they're actually telling us what the market is, what the market has been doing in whichever period of time we select. So if I'm on a 5-minute time frame, that means each one of these candles forms every 5 minutes. So this will be 5 minutes, 10 minutes, 15 minutes, 20 minutes. And again, we can see the market is doing the thing, right? It's doing the thing. So 5 minutes just gives the market some time so you're not having to think so quickly. The example I always use is like if you went to a restaurant and somebody just, as soon as you walked in the door, they like, what you want to eat? Like you only got 1 minute to think about it. You would probably be a little frazzled because you need a little bit more time. And if they said, okay, I'm going to give you a menu and I'll be back in 5 minutes, you feel a little bit better about that because you have more time to think about what you want to do. So that is why I like to choose the 5-minute time frame when I'm analyzing. But of course, if you want an even bigger analyzation of the data, you can look at your candles for every 10 minutes. It'll be something like that. You can do every 15 minutes and all the way up to 4 hours. But for the purpose of this class, we're going to use M5. Now that is our trade analysis time. The time that we're going to be into the trade, you also can select that. Now, like I said, I was going to mention updates. You could be in the trade for 5 seconds. So let's just say I change my thing to S5. I wouldn't do that. So if I got into this trade for a buy, right, I'm only going to be in that trade for 5 seconds. That's not a good look. You can be in the trade for 15 seconds. If I got into the trade for a buy, again, I'm only in that trade for 15 seconds. The minimum that I would recommend that you should be in a trade, the minimum would be at least 1 minute. So again, they have 4 hours. And if I was to click that trade is literally going to be going for the next 4 hours. And there's no way for me to close it. So I'm just going to let it go. So for this session, you want to select M1. And if you don't see the time, you may see a flag right here. Just click on the flag and you should be able to select your time frame. M1. And this is what I was saying earlier. If and when this trade clears, right, you will make $192. So I'm going to just close it now because I don't want to look at it for 4 hours and we're just going to keep going. So the second thing, again, is how much you're going to risk. And you have 2 ways that you can do this. You can choose a dollar amount, which is $100, or you can choose a percentage amount by clicking on the dollar sign. So if I know that, all right, I only want to risk 20% of my account today, then you will put 20 or whatever they let the max be, because you can't risk more than $1,000. Okay, 2%, right? It'll take $1,000 out if I decide to get into this trade, right? It'll take me out for $1,000. And then based on my new account balance, the new 2% will be right here. So I like the fact that it calculates that automatically. So this was a high risk trade. Again, no rhyme or reason about it, but this is an example of why I like high frequency trading. If this were a live trade and I risked $1,000, my profit would be $920, and I could possibly come up $1,920 in 1 minute. Now that's really good because some people make that in about a month, right? If you would like to make up to $1,000 a minute, right, or a month, just drop in the chat. What would you choose, right? A minute or a month? So this trade has about 15 seconds left. We're going to let it play out. Again, these are not trade ideas yet. I'm just kind of going over the basics before we get started. Okay, so we have 3 seconds left, and my balance should go from 45183 to 47103. So that's amazing, right? Once you actually learn how to do this and you learn what you're looking for, those can be your results, right? You may not get rich overnight, but if you have the skill, the more that you increase your capital, the better you increase your chances of being able to get this bread. So we're gonna go ahead and get started. The indicators that I'm using today are going to be I'm using 2 moving averages. And you can find these indicators by selecting the indicators tab and then clicking on moving average twice. Right now, unlike TradingView, which we talk about on Sundays, you can add unlimited indicators on your chart. If I wanted to add every single last one of these things on my chart, I can do that. If you're using the free version of TradingView, they only give you up to 3, but you can pay, and it'll be like $15 a month, which is not bad at all. So here we go. Now with trading, we are really focusing on something called support and resistance, or supply and demand. So like I was explaining earlier, when I did the example on the news, if you find an area at the bottom, right, you may see that the market is coming off of a selling trend, because the market can do 2 things. It can go down or it can go up. So if you notice that there have been a series of sell candles, and then you see a place where the market is having a hard time getting lower, it's having a hard time getting lower, it's having a hard time getting lower, this is called an area of support. This means that price is supported by the buyers, and they're tired of the price going lower and lower and lower, so they're going to raise it, right? So where price is supported and you see that resistance there, that is called an area of support. Now on the other side, that line is cricket support. They ain't no better, but y'all know what I'm trying to say. What's the numbers on the moving average? Okay, so the moving averages I am using are, I have a 50. It's always going to be a 50 and a 20, or a 50 and a 200. So for one of them, I have a 50, and make sure you change it to EMA, because EMA is exponential moving average and SMA is smooth moving average, and EMA is exponential more data, right? And then your style, I just change it to blue, and then I make it 3 pixels because I need to see it. And we're going to save that. And on my second EMA, the settings are 200. You change the moving average from smooth to EMA. You change the style to any other color that's not going to clash with the other colors on your chart. And also make the pixels a little bit thicker so that you can see it. So once you have it, just give me a 777 in the chat. Or if you need me to repeat it, let me know. All right, perfect. So again, we have the support at the bottom. This is a place where price is having a hard time getting lower than. And then at the top, we have the resistance. And of course, this is the resistance because price is resisting going any higher. So you'll find, before you find resistance, you'll find some type of uptrend or a continuation of candles, right? And just because it is an uptrend, that don't mean all of the candles have to be blue, right? Because the market is never doing one thing. It's always going to be doing this. Even if it's a small, it's always going to be doing that. So resistance is found at the top. Support is found at the bottom, right? You want to sell at resistance, right? You want to buy at support, right? So they say buy low, sell high. And this is why. And an example would be, let's just say you buy a really nice jacket, right? And you bought this jacket for $500. Now, you would want to sell it for more than you paid for it if it's a rare jacket, right? Because if the price goes up, you have some people that may want to buy it, but if you do sell it once the price goes up, you're going to make a profit. Now, if you drop the price down to $200, you're going to get a lot of people trying to buy it because this price was initially $500. So that's why you buy low, sell high. Just literally think about it as when you shop and you catch a sale, you want to catch it for the best price possible. And if that price is no longer appealing to you, or you want to get rid of it to make a profit on what you bought, you're going to sell it for a higher price. So that is where that comes from. Now, when we're trading HFX, once you understand the concept of support and resistance, I'm just going to scroll on my chart a little bit. Oh, and this is an example of what I was just saying a few minutes ago, y'all. Even though it's an uptrend, it's a clear uptrend because we can see the shape. Just imagine walking upstairs, right? Or going up a roller coaster. That's what I say. Like the anticipation is building. Just because it's an uptrend, you'll still find some resistance in between, but it's the overall trend that you're looking at, not a particular candle. And the same thing when it comes to a sell. Just because the market is selling, right, that don't mean that you won't have your blue candles in between. So you really do want to establish the trend and figure out, let me see if I can make this 1 hour. So you really do want to establish the trend to figure out which side of the market you should be trading on, right? If the market is going up, and you'll notice this by the EMAs. That's why we have the EMAs there. And I just need to zoom out a little bit. I don't know why it's acting like this. I'm gonna just zoom out a little bit, right? So when you see that the candles are above the EMA, you're gonna want to focus on more buying opportunities, right? Because remember, these are just minute trades. So if you have a decent risk size, decent risk amount, and you clear 4 trades, you could be good to go, right? Because you can do 4 trades in 4 minutes, risk $10 in each trade, and then walk away with, depending on what your profit is, walk away with $25 to $30 in 4 minutes. And some people make that in an hour. So it's not about taking every single trade idea that you see, but it's about positioning yourself to take the best trade ideas. So when candles are above the EMA, you're going to want to focus on buys, right? And again, there's only one exception, and that's when you see a lot of resistance in the same area. So here's the perfect example right here. Now, in this case, we're looking right here. In this case, we see that the candles are above the EMA. However, we see resistance, 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 right? Price keeps coming up to a certain place. So we know once price gets to that place, we're probably going to want to take a sell, right? We're probably going to want to take a sell. And then vice versa. If you see that the candles are at the bottom, this market has been going up for some time, but if you see that the candles are below the EMAs, you are going to want to focus on sell opportunities because you could have cleared this trade, this trade, this trade, this trade, this trade, and still walk away with a profit. Again, unless you see a lot of rejections in a particular area, like unless you see rejections, like right here, we see 1, 2, 3, 4 rejections in the same area. That's going to instruct us to buy. So I'm going to do some trades. And if you guys do get into these trades, if you do take the trade idea, just drop in the trade. And then when you do clear, right? I haven't, it's just so funny. Like I just remember the live sessions, like clear, clear, clear. When you make money in a trade, it is that means we cleared the trade. And if you do not clear the trade, that's perfectly fine. Every L is a lesson, and you can always recover it in the next trade. So again, these are meant to be in your demo account, but I'm not your mama. You can do what you want. But I am going to teach as I go along. So the first thing you want to do, of course, is set up your support and resistance on what you can see. So I have the tools here. You have your drawing tool, and you just want to simply get a horizontal line, right? You want to get 2 of them because you need one for your support and one for your resistance. So you want to put a line where you see resistance, and I'm going to put one right there. Why? Because that's the highest point that I see. I see that every time price gets close to that line, right, it actually ends up turning around. So for now, we're going to call that our resistance line. And I'm going to change it to black so it's not clashing with the other colors on my screen. And I'm also going to change the pixels to 3 so that I can see it a little bit better. And you're going to want to take your support line, right? And you can set up as many supports as you want because technically this is a buying market and those are the types of ideas that we should be looking for. So I'm also going to do the same thing for this line. I'm going to turn it black. I'm going to make it 3 pixels and I'm going to save it. So now we just wait, right? We know potentially, right, that if the market gets back down, and with HFX, we only use the last 3 digits. So we know that if the market gets to 973 or lower, we should get in for a buy, right? That's a potential buy opportunity. But let's just say the market decides that it wants to keep selling. I'm going to highlight another area of support, which would be the next place that the market is trying to go if it breaks structure. So most of trading really is a waiting game. Your analysis shouldn't take you that long, but I'm going to go ahead and just clear that off my chart. And then we're going to see what happens from here. And let me just see if I can find another resistance, but that's a strong resistance for now, but this is a buying trend. So you guys, again, can wait until it gets to, and I'll drop this in the chat as well. You can wait until it gets to 973 or lower, right? For a buy, or you could potentially take, and again, this is a tip that I want to give you guys because sometimes this is a buying trend, but you do see that resistance there. When you're trading with the trend, this is how I trade, and this is, you can do this or not. You can take 1 minute trades, but when you're trading maybe against the trend, like let's just say the market decides to break past that line, I would get in for a longer trade because within that minute, it can keep going up and keep going up, but we know that it really wants to go down. And another indicator just to mirror our Forex charts is the momentum indicator. Simply put, if the bars at the bottom are up and green, you want to take buys. If they're down and red, you want to take sells. And you don't have to change any settings on that. If they're up and red, this is letting you know that a potential reversal is happening. So now we wait, y'all. So we have 973 or lower for a buy. And I think that number is, I can't really see it. So let me just bring it down a little bit. It looks like 193 or higher for a potential sell. 193 or higher sell. So those are going to be our two trade ideas. And while we wait for that, I'm just going to show you guys really quickly how to set your pending orders so that if you wanted to just mark up your charts, go to the grocery store, go to the bathroom, take a smoke break, you still won't miss the trade idea, which I really love. I love pending orders in general. So you click pending trades on the side. It's here on the right panel. And you have options. You can do it by the time or you can do it by the price. But we're going to do the price because these lines, once you put the line there, and the number that's associated with that line is the price that you would buy or sell at. So we said, okay, if the market gets down to 106,973, right? And the payout is at least a minimum 60%. It's at 92. So we would be in the clear for that. We know that we will want to get in for a buy, right? So you set your price where you see the line at. You set the minimum payout that you're willing to accept the trade on. You select your time frame, right? Anywhere from M1 to hour 4. And then you put what you want to do, buy or sell. So once you do that, it'll pop up in your pending trades. And you literally don't have to do anything else. Once the market gets back to that point, your trade is going to trigger, right? Your trade is going to trigger. So if you wanted to just do a bunch of markups, like if I wanted to set another pending order for here, right? Once the market gets to 106,741 or whatever that number is, the payout to at least 60%, I know that that's another buy opportunity. So I can set that as well. So now I can see that I have, this is an old one that never triggered. So now I can see I have 2 potential trade ideas that's just already sitting there. I don't have to do anything else past that. So again, we're literally just waiting for the market to either hit our resistance zone or higher so that we can get in for a sell, or to hit our potential buy zone so we can get in for a buy, right? We're literally just waiting. And if you're not a patient person, I do encourage you to be patient. You could, of course, change well, that's not going to change how fast the market moving, but you can change how you're looking at the candle. So instead of it being every 5 minutes, it can be every 2 minutes. And if we are doing this, we can see that we have an even lower level of resistance right here, right? If we look at it on a tighter time frame. So let me add a horizontal line here, right? So we have another potential sell on a smaller time frame. We can see that if the market, and I'll drop this in the chat as well, if it gets to 134 or higher, right, that is another potential sell, right? So if this is making sense so far, everybody, just drop some 7s in the chat. And if you do have any questions, just go ahead and ask those questions and I will answer them. Now, remember, it could sell at 134, but we can already see based on our markups, and this is why it's important to mark up your charts. If it breaks past 134, I need to make this line thicker. I really cannot see. we know that if it breaks past 134, then the next place that we're going to want to take that sell is at 193. So we're going to see what happens. It's getting close to 134 or higher, potentially sell. If you do take that trade idea, just let me know. If you are going to wait for the higher entry, that's perfectly fine too. But we can literally see in real time how the market is currently finding resistance at this area. Now you can get in early, but that's not always the best thing to do. So let's just say I decided to get in now, right? And I got in at 131. Right now, the market has broken past. It's higher than 134, which we should have waited for. And let's just see if I take that trade idea and see which one is more likely to clear. The lower one, where we didn't wait, I got in at 131, or the higher one, right? I should have waited for 134. So now we're just waiting to see if the market is going to come back down, or if it's going to break past that zone and go into the next area, right? And again, it looks like it's breaking past, and this is why we wait on the 5, right? Now, we still have about 30 seconds left in this trade. Anything could happen, but if these trades don't clear, we already know that the markups that we did on the 5-minute are more valid, right? Because the data is being analyzed over a larger amount of time. So again, look, I got in at 131. I took the trade prematurely, and I'm going to lose this trade. I'm perfectly fine with that, because when you jump the gun, you lose money, and that's not what we want to do. And again, this other trade is also going to not clear because we were not patient. Now, let's see what happens when the market gets to our initial entry point on the 5-minute over a longer period of data being analyzed. 193 or higher, right? We're going to see what happens. And if you are going to get in at 193 or higher, just drop 193 in the chat. I'm just waiting for a little push up, a little boost. If you would have taken the trade when it got to 194, you will be in profit right now. Or if you did take the trade idea, you should be in profit. Okay, there we go. So I got in at 195, which is higher than 193. And we are expecting the market to drop down. We see prices resisting at our area. We see it's resisting. Yeah, I'm in at 195. It's about 10 points above, which isn't bad. Which isn't bad. We have 35 seconds left. We see prices having a hard time reaching. Okay, but price has broken past our zone, which is not bad at all. Again, guys, this is a learning situation. Now, this is a perfect opportunity to say, if price gets higher than the resistance that we can see, where is it going? Now we will have to find an even, well, I already have resistance lines up here from the past, but let's see what's going to happen. This is a close one. All right, so price broke out of that zone. And when that happens, guys, I encourage you just to look at where's the next area of resistance, which we can't see on this chart. So let's see. I'm going to go to the daily, and I'm going to find a higher area of resistance. Sorry, this thing isn't moving out my way because I need to be able to see more of the chart. But yeah, it's coming back down now. Sorry, y'all. This little pop-up won't disappear, so I can click and see it see more stuff. It's not, okay. Sorry, y'all. I don't know. I can't change it. Okay, there we go. But I don't want it on the 14. I want it on the day. Anyway, I'm going to just go back to H4. So pretty much price has broken out of the zone. But again, if the market is above the EMAs, you are going to want to focus on buys. So am I upset that I took this loss? No. This is why we're using the demo account. So let's just set the new area of resistance. And let's just set our new area of support. So now we have a potential buy at 040 or lower, and we have a potential sell at 200 or higher, because this is our new resistance area. But if we look at all of our indicators, we see that the candles are above both of the EMAs, and we also see that the green bar is above, it's up, it's facing up, and it's green. We know that we should probably wait for the market to come back down to 040, and then we should take the buy at that place. So this is another perfect example why you should trade with the trend and not try to trade against the trend. So we're going to see what happens. Or again, you can set your pending order once you find your new area of resistance and your new areas of support and see what happens. We have to wait for it to come back down. Again, we don't want to take this yet. We want to focus on buys, but we have to wait until it comes down to a valid area. So our next supported area, it could be here, right? 185 or lower, but I would even wait for it to come even lower to 040. So let's see what happens. And again, feel free to ask any questions. This all goes into understanding the charts and understanding what happens. If you guys have been on the other sessions, we can also see why that trade was lost was because there was a break of structure. And the break of structure is, sorry, y'all. I'm looking for there we go. And the break of structure means that the market has broken out on either one side or the other. So for example, we can see that the market was selling here. Then it was buying. Then it was selling. Then it was buying. But for some time, the market was just in this area. Now, a break of structure means that the market was doing this, and then it decided to break out of that structure, which has just happened, and it broke out on the upside. So when it breaks out on the upside, focus on buys. If it breaks out on the downside, focus on sells. And I'll just give you guys an example of a breakout on the downside too. So let's just say the market was here, right? We can see that the market was ranging in this area. And then we had a break of structure on the downside, which means it broke out of the trend and then it continued to sell. Same thing. We can see that the market was ranging a little bit here. That's the top. That's the bottom. We see it had a break of structure here. And then we see that it continued to buy. So let's just go back and see what's happening. We see that there was the break of structure to the upside. So now we're going to focus on buys, but we do have to wait until it comes back down to a supported area. So this is Euro USD. You can do this on any currency pair. I'll just look at another currency pair just to keep it moving right along. So we already have a resistance line here. Let's see if we can get another one to see what's going to happen if it breaks out. All right, we got resistance there. We have support here. We also have support here. And we have more support down here. So let's look at what can we see with this trade. We see that the candle is above the EMAs. It's above the first EMA. We see that the momentum is high and it's green. So we know that once the market comes back down to, that's pretty low. Once the market comes back down to about 431, right? And I'll drop this in the chat, 431 or lower, that's going to be a potential area to buy, simply because we have multiple confirmations that lets us know that we should do that. So when you're getting into a trade, you want to ask yourself these questions, right? For sell, and I'll drop these questions in the chat as well if you're taking notes. For sell, you're going to ask yourself, do I see, right? Do I see a red candle, right? The next thing you're going to ask yourself is the candle below one or both EMAs, right? You're going to ask yourself, is my momentum indicator red and or facing down? And the last question you want to ask yourself is, and this is something else I wanted to review in this session, this is called the market watch. You want to ask yourself, who is in control of the market? If it's closer to the red side, it's letting you know sellers have control, and there's probably going to be a dramatic drop in the price. If the bar is more so to the green side, you're going to know that buyers are in control and you have more momentum on the buying side. So this can be your fourth and final question that you ask yourself is who is currently in charge of the market? And again, you're going to want to trade with the trend. So who is currently in charge of the market, right? And for a buy, it's just the opposite. Do I see a blue candle? And then you're going to notice once you ask yourself these questions and you take these steps, you're going to find yourself clearing more trades. So number one, do I see a blue candle? Two, is the candle above one or both EMAs? Three, is my momentum indicator green and or facing up? And number four, who is in control of the market, right? So let's take it back to the beginning and let's ask ourselves these questions and figure out how many confirmations we have so that we can take more appropriate trades. So I like to call this a tally. So I do this, right? Buyers and sellers. So I ask myself the questions. So it's looking like a sell right now. Is the candle blue or is the candle red? It's red. 1 point for the sellers. Is the candle below one or both EMAs? This candle looks like it's about to cross down. So currently it's above. So if I said, is the candle below both EMAs? I would say, okay, buyers get 1 point, right? Sellers could get a half a point because it looks like it's about to cross down. Is the momentum indicator red or facing down? We're going to say no. So the buyers get another point. And then the last one is who is currently in control of the market? And it's sellers, right? So it's half and half. So you really want to go with whatever side has the majority. So once this candle actually crosses down below this EMA, the sellers would technically be in control, and that would give us confirmation to get in for the sell versus getting in for the buy. So we have a resistance area. I just did a high resistance because I made sure I go back in the past, but I'm going to add another one. I'm going to just move this line. Because now that my seller is looking like they're taking control, I'm going to add this line right here. I ask myself all the appropriate questions. I see that the sellers are currently in control of the market. So I'm going to want to focus on sell ideas. It's not letting me change it, y'all. So again, because we have all of our confirmations, this should give us more confidence that if the market, because we have our confirmations, all of our confirmations on the checklist, if the market gets to 611 or higher, we're going to sell, right? And now we have everything. Sellers are, well, this goes back and forth, but sellers just had 81% control. This candle was dropping below the EMA. We're going to see what happens, right? We can get in on this candle or we can wait a minute and 25 seconds for the next candle because it may change. You may have to reassess, right? So let's wait until this candle finishes and see what the next candle is going to do. And this is another reason why using your 5 minute is good because you have the time to ask yourself these questions. Okay, so 611 or higher is still valid for the sell, but this candle is about to be over and we're going to see what happens with the next candle. Because it could turn blue and it's above the EMA. So what you see may change. And buyers are now in control on the market watch. So I wouldn't really focus on buys too much, but some people are impatient. So ask yourself the questions: what color is the candle? Blue or red? Red, is it above the EMAs? Yes. Is my thing green and facing up? Yes. Who's in control? Buyers. So in this case, buyers are in control, and we already have our support at 411. So we can say 411 or lower buy, 611 or higher sell, based on the confirmations that we have. Based on those confirmations. So let's see what happens in the next 15 seconds. If we're going to be focusing on this buy at 411 or lower, or this sell or 611 or higher. Okay, so I see green down here. Let's see. Again, trading is a waiting game. Okay, so we got to ask ourselves the questions again. A new candle. Is the candle red or blue? The candle is red. That's 1 point for the sellers. Is the candle above or below the EMAs? It's still above. It hasn't crossed down yet. Okay, it's crossing down now. It's crossing down. It's crossing down. So let's do our assessment quickly. But we have 5 minutes, so it's fine. We got a red candle below the EMA. Sellers. It's still 50-50. So now our new support has become our resistance simply because the candle has officially crossed down. So now 411 or higher will become your selling point and not your buying point. I know it seems a little bit confusing, but it's not. It's just that the market is moving really quickly and you do have to reassess at each candle, right? So now instead of this being a support, we officially have more confirmations for the resistance. And once the market gets back up to this point, 411 or higher, that would now be more likely to sell. So I'll drop that in the chat, 411 or higher sell. And for you guys who have traded this way before, you know how finicky the market can be, but I am going to take this sell once it crosses above 411 because I feel more confident now that the candle is technically below both EMAs, which is one of our trading checklist questions. So don't just rush. Just because you come in here and see a red candle, don't automatically sell. You want to take a step back and be like, okay, what am I seeing? What is actually happening right now? So now we wait. We can go back and check on. Sorry, y'all, I'm just looking at both charts right now. And you could look at both charts just by clicking this right here, this little thing right here, and it'll bring up both charts for you. So Euro USD, I forgot what our things was. I would have to go back and reassess it, but let's focus on CAD-JPY. Now we just wait, y'all. I promise y'all, it's really just a waiting game. We have our support and resistance lines there. Now we just wait for an opportunity to enter. And as you can see from the earlier example, if you enter too prematurely, you run the risk of losing more money instead of just waiting. And as you can see, the market, even though it's at 340 now, is not going to take that much time to revisit 411. This is a JPY pair, and they do tend to move pretty quickly. So now we just gotta wait. We just gotta wait. And then, of course, in the meantime, you can check to see if I look on M2, right? Do I see any other resistance? Do I see any other thing? Do I see any other support? And we're still gonna wait. Not gonna rush it. We can see on a 2-minute that the candle is officially about to cross here. And then we have another level of resistance here. Let me just circle it. So we have resistance here on the 2-minute. And we have resistance here on the 5-minute. So we just wait. Literally. And again, please ask y'all questions. And let me clear this stuff off the charts. All right, so it's pushing down into our new zone. But I'm still going to wait. I'm not going to rush it. And also, it makes sense if you color code your lines by the time frame. Like my black lines are for my 5-minute. But then if I saw that this was a resistance on the 2-minute, I would just make that line orange. So I would know. Like, okay, this is resistance on the 2-minute. For example, again, my 5-minute lines are black. If I find resistance on the 2-minute, I would just change these lines to a different color so that I can know, okay, it's not resistant on a 5, but it's resistant on a lower time frame, right? Okay, it's about to be back to 411, y'all. Let's see, 411 or higher for a sell. I knew it would get back there. It always does. All right, so I got in at 424. That was my entry point, and the market is dropping down. And this is resistance on the 2-minute and on the 5-minute. So let's just see what happens. And it is actually better if you can find resistance on multiple time frames. The video that we did last week was actually setting up your support and resistance on multiple time frames, specifically for things like this. So if you guys did get into this trade and you did take this trade at 411 or higher, just drop in the chat. And if you do clear the trade and make money in the trade, just drop cleared in the trade. Okay, awesome. You don't have to take the trade. All right, perfect. Oh, I know this is your, I didn't even know you was here, Spicy. Hey, girl. I know this is your favorite pair, so you probably done took like 5 trades already. Probably hella in profit. All right, so awesome. So that was a great trade idea, and we could see that that was a really good level of resistance. And again, I know you did. And again, just piggybacking off of our other lessons, you can do the same thing here. If you see liquidity as well, plus the candle is below the EMA. So we have liquidity, we have it below this EMA, we have it crossing below this EMA. It's almost there. We also have our bar is not red, but it is facing down. So that's a few confirmations for the sell right there. Once it officially crosses here, it'll be that break of structure that we're looking for. And the break of structure already happened. So once that happens, it's you can take another trade. So let's just see. I'm expecting it to continue to drop simply because there was that break of structure there. Or again, wait until it gets back to 411. But I took another trade on the minute. My trade entry point was 288 or higher for a sell. It's currently about 60 points below the entry. And again, that's another reason why I love just looking at your trade screen, because you can see where you got in, you can see where the market is, and you can see what the difference is. And you also can see your balance as well. So I feel like I'm talking too much, but I'm the teacher, right? So basically everything that we learned today, when you put it all into perspective with your support, with your resistance, with your indicators, with the break of structure, with your confirmation questions, it should all make a lot more sense. Like, it's different when if you really don't know what's going on and you just come in here and you're clicking buttons, or let's just say you come in here and I'm gonna just delete all this stuff off the chart. Let's just say you come in here and you don't have any indicators, you don't have anything on, you just like, well, I see a red candle, I'm gonna click sell, right? So I all I did was I didn't do anything else just now. I just see a red candle, I just click sell, and we just gonna see what happens, because it's really not a guessing game. Like, it's not a guessing game. Well, if this trade clear, that's by pure luck, but that's not the point I'm trying to make. I'm trying to say it's not a luck game. It makes sense when you ask yourself the questions and what are you actually seeing right now. I know that this market will continue to sell because there's some liquidity down here. So I know that the market is at least going to push down to this point, because it has to come back to this point, and then it has to eventually come back down to this point. And I'll just leave that line right there so we can just see how true that is. But something we'll probably talk about next week, I mean on Sunday and next week, is filling in market gaps. So we can literally see that this is a gap. Like, this gap has to be filled. Like, it literally has to be filled. Like, whether it's now or later, the market literally has to fill this gap. So just with the other confirmations here and knowing how the market works, I would expect it to continue to sell, simply because this space. Oh, see, look, our trade triggered from earlier, y'all. I'm not even on Euro USD right now, but our trade, it triggered. And that's the pending order that we set. And what was it? 973 or lower for it was a buy. So we're gonna see what happens with that. We just gonna let it go. But the fact that it triggered, that's the purpose. You put in trade ideas, you forget about them, you go about your business, and whatever happens, happens. But yeah, do you guys have any questions? If you have any questions, drop a question mark in the chat. Or if you guys want me to do a few more examples using the trading checklist, just drop some 7s in the chat. And again, the market is coming back down because this is a gap that has to be filled. And then another gap has to be filled. And then once all of this is filled and they take all these people out, it's going to end up turning back around. But for now, it's going to push down until this gap is filled. Okay, you said you got in at 145. For a sell or a buy? Because the market is not even for a sell. Okay, so you should be in hella profit. You should be in hella profit. You should, yeah, clear. Okay, awesome. And as you guys can see, look, I can't make this up. I can't control the market. I'm not a wizard, but I just understand price action and I understand what's going to happen. Did the market, did it or did it not fill this gap? Did it or did it not fill this gap? And it's going to continue until this gap is filled as well. Like it literally has to fill that gap. And I will, like I said on Sunday, because that's another way to trade. Yes, gap filled, exactly. Gap is filled, and then look what's going to happen. It's going to turn back around, right? It's going to turn back around. There's no gap to fill on this side, and it's in a selling mood. So it's going to turn back around for a little bit. It's going to come back up to this area. It's going to, I can't say stop loss, but it's going to take out all these people with this liquidity here. And once it reaches this point again, it's going to come back down and it's going to fill the rest of this. And then it's going to turn around and go back up until it gets up here, right? Because once that happens, now another gap has to be filled going the other way. So that makes sense, y'all. Just drop some sevens in the chats. I know it probably was seeming a little bit wonky at first, like we was just pressing buttons and doing stuff, but when you put it all together cohesively, that is when it really makes sense. So it's literally like doing makeup or like building something. If you're in the middle of building a chair, you're not going to sit in that chair and be like, "Ooh, this chair wobbly." Like, doesn't make sense. Like the chair is not finished being built. Once everything is built, you can sit in it. It makes sense. Yes, it corrects itself. The market is always going to correct itself, right? Now, whether you're trading Forex or whether you're trading HFX, these are things that you can look out for and things that you consider when you're trading, right? These are things to look out for and to consider when you're trading. So again, last chance to ask questions while we're just waiting. And again, I'll just give you guys one more potential trade idea, which will be somewhere around there. And that's simply because there's liquidity there. There's liquidity there. Oh, I should probably use real lines, right? So we can see the numbers. I promise y'all, I'll just be on some other stuff. So, and these are pending orders that you can set. You can set a horizontal line right there. And you can also have a potential sell there. And there's going to be a potential buy there because it's getting a little liquid and it has to fill in the gap on the other side. And a horizontal line would be there. So I would say 833 or lower for a potential buy. It's going to be a little bit risky just because we know we're trying to fill this gap. Or if you just want to only focus, let's just put our indicators back and see what's happening. Or the sell would be at 984. So it'd be 984 or higher for the sell, and then 833 or lower for a potential buy. So it's a little bit below 833. If I got in for a buy, we're going to see what happens. There also was a break of structure on the downside, but there's also liquidity over here that has to be filled. So I got in at 832 or lower. It's 45 seconds left in this trade. It is going to be a very, very, very close one. Because that gap is almost filled, the sellers are going to get more aggressive. They're going to fill that gap, and then you're going to see some really strong blue candles coming in on the upside. So this trade has about 32 seconds left. Right? We're going to see what happens. Is the gap going to get filled, or is it going to be that resistance? And we know it's going to be a close one just based on price action and what's happening right now. And the more confidence you have in your trading and the more you actually get in and practice your trading, you'll be able to eye these things and know, like, should I get in for a 1 minute? Should I get in for a 3 minute? And again, this was a risky trade, but it's still cleared, which is good. So yeah, y'all. So let's just look at our record for the session. Again, it was acting crazy, but that's perfectly fine because that's just what happens. But at the end of the day, you can lose money, but you should, if you're doing proper risk management, you should walk away with more than you lost. So in this session we took, and these trades down here really don't even count, but we can say we took 1, 2, Oops. We took, come on, close. We took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Wait, I'm bugging. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades. Out of 13 trades, we cleared 1, 2, 3, 4, 5, 6, 7. So we cleared 7 out of 13, right? 7 out of 13 clear. If you guys want to document this, post it on your IG to get your loyalty points. 7 out of 13 cleared. But look at this, right? We only lost 1, 2, 3, 4, 5. We lost $501, right? And I'm just putting this in the chat for perspective. We lost $501 loss. But how much did we make? We made, and I just got to do the math real quick. We made 1, 2, 3, 4, 5. 92 times 5 is 92 times 5 is 460 plus 1920, right? Plus 920. So overall, we made 1380. We lost 501. So we still up for the session, and we made a profit of $879, even with our losses, right? Even with our losses. Now, if you're trading on a smaller account, you may have only made $87, right? But you still will be up. You win, you lose. But as long as you're using proper risk management, it only takes a few good trades to get your account back into good standing. So that's really all I have for y'all today. If y'all have any questions, again, like I said, just you can unmute yourself or drop them in the chat and I'll answer them. If you are, I did email you guys and let you guys know about the buddy program. The buddy program means that you can extend your membership to anybody of your choice, and they'll have access to all the same things that you have access to for the duration of your mentorship plan. So welcome, Terrell. Thank you for coming. Thank you for taking advantage of the opportunity and education, because it is a skill worth learning. And then you guys also know that we have the loyalty program, where if you are sharing content, if you're taking screenshots of the session, you're participating in the chat, you're sending me withdrawal screenshots, you can accumulate points, which you can redeem for things like additional one-on-ones, NFTs, or even Bitcoin deposits. Because if you know me, you know I love giving out money just to encourage people. And I know we be losing a lot when you're in the process of learning. So that's just my way of giving back. But I don't have anything else to say. Just thank y'all for coming. And I will see y'all on Sunday, where we will definitely be talking about liquidity and market gaps, because I think it helps to put that into perspective as well. And we just saw it in real time. So you're welcome. I'll see y'all on Sunday. Text me with any questions that y'all have throughout the week. And that's it. Good night.